So hello traders, welcome back to another technical breakdown. So you guys have been asking for technical analysis breakdowns and we listened, so we've brought them back. I'm going to take you through what is happening in the market from a technical perspective, fundamental perspective. I'm going to look at charts, what to expect. Probably I'll share with you one or two accounts, what I'm doing on the prop firm side. I think it's very crucial for me to also update you on that side just a bit, just touching up a bit. I'll do another video on that side. Now, to start off fundamentally, today is 29th of April as I'm doing this. On the 1st of May, we expect the Federal Reserve to be giving out a statement, their decision on interest rates. We don't expect a change really much on interest rates. I think rates will still remain the same. What we're really watching for is the dot plot and their view on where markets, not where markets are going, where the economy is going and where interest rates are likely to be. Markets are pricing in one rate cut for the year, probably in December. Some people disagree. They think a rate cut should come before we go into the election cycle. But ultimately, it's dependent on what the Federal Reserve does. So none of us is really going to affect markets or alter markets much. As I'm doing this, it's Monday. New York session has already started. Not much is happening in markets again from a price action perspective. Markets have not really moved that much or significantly. I think this is that week where markets wait for Wednesday before we get the huge moves up and down. So it's wise to wait for Powell to speak before you take your positions, you know. After Powell has spoken, it will be quite easier, you know, to take risks here or there, or to know how to position yourself in the markets. Before that, just take your time to, you know, observe what markets are doing and observe the different positions you're watching. Friday, we have non-farm payrolls. Strongly watching the labor numbers. One is because it's the strongest indicator of what is likely to happen in the US economy, and whether we are growing or we're declining, that is decelerating. So I think on Friday also we have NFP. Those are the two main movers of the week. From a geopolitical perspective, we know what's happening in the Middle East, you know, Iran, Israel, Palestine, Russia, Ukraine. We have a lot of geopolitical instability. We don't have a very democratic world at the moment. We don't have a world that is very solid at the moment. We have some tensions, you know, across the world, and we're watching how these tensions will escalate, you know. We also have Russia, we have China, US, Taiwan. So we have a lot, you know, going on from that perspective. If you look at also the yen has lost quite some significant value. Markets are speculating that the central bank will be forced to intervene. The yen is trading at one of its lowest periods, lowest prices, I mean. For the last 34 years, I think we've never seen the yen trade as low as that, against the dollar specifically. So I think there we could also get a trade. There's an election in Mexico. So there's a lot, you know, there's a lot going on across the world that is affecting markets. So to start off, I think I'll look at the gold chart. Gold has moved from about $2,000 start of this year to trade as high as $2,400. Precisely the highest price attained was about $24.28, $24.27. Do I think the bull market is over? Not yet. Do I think prices are going up? Yep, but at the moment, do I think they're going up? Not really. And as much as that, I think they're still going up, and I still think the bull market is not over. I'm not predicting prices. I'm looking for 2,500, probably 3,000. But if prices don't get to those levels, I'm very comfortable. So I look at gold from a monthly perspective, down all the way to the 4-hour time frame. That's the lowest time frame I personally look at. I'm a swing trader. Most of my positions tend to take place from a week-to-week perspective. So I'm not very active in the market. Like this week, I've not taken any trade yet. Probably won't take any trade depending on what the Fed does. I think I'm waiting for the statement on Wednesday to see how markets will react before I can position myself. Anyway, if you look at gold, we're currently trading at about 2,400. You can see the last 2 months, some bullish momentum has been behind the markets. As much as we have gotten some bullish momentum, this candle is supposed to close tomorrow. We've closed below the R3 level, signaling a potential sell-off, but not a very big one, probably a correction. before the trend continues. So on the monthly chart, waiting for this monthly close to see. Still very bullish though, not very bearish. I wouldn't say it's bearish, I'd say 50-50. The only thing we have is a rejection of 2400, but we have not really gotten that bearish signal that tells us this is a green light to sell. So still we haven't gotten that. If I look at it from a weekly perspective, okay, markets have bounced off the fair value area, 2000 level, started moving higher. We've moved higher from about 2000, we've gone to 2100, 2200, 2300, finally go to 2400. Not much bearish momentum coming into the market. Last week we got some bearish momentum pushing prices to about 2300, but as the week was coming to a close, again we came back significantly higher. Now the question is, what will the Feds do for this week, and what will they give as the dot plot of what they expect to come in the future? Now based on that, we will know either gold will continue with the bull trend or will get a minor correction. However, from a technical perspective, we could easily conclude that if prices remain below the 2400 level and the R3 level, we could easily drop to the 2200 level, especially if we get a solid weekly close below the 2300 level. However, if we remain above the 2300 level and prices fail to go below 2300, then I think there's a very high chance we will see 2500. My signal for 2500 is a solid close above 2400, whether from a 4-hour perspective, daily, weekly it's too late. On the downside, I'm looking for a close below 2300, for a green light for a short 2200, 2100 level is I think the lowest level where I expect markets to correct to. Okay, so that's my first outlook from the weekly perspective. On the daily chart, markets are still trading above the R3 level. Again, like I said, you can see we've gotten a move from 2000 to 2400, a slight correction, you know, to 2300. Prices have started coming back, but have not closed above 2350. So I'm keen to see one, the new pivot formations which are supposed to come in May. So I'll see how markets will position, and then I'm also very keen to see if we'll get a solid close above 2350, 2400 level for today and for this week. I don't expect much from markets though, at least till Wednesday when Powell will speak. That's when I think momentum will come back into the market. Now on the 4-hour perspective, if I look at markets from the 4-hour perspective, you know, I have a flag formation here which suggests prices are likely to keep moving higher. So you can see we got this flag formation on the 4-hour chart. You know, prices came back lower, found support at 2300, started moving higher. Now this move is only supported by a close above 2375. Failure to close above 2375 could mean a third trend line bounce and a short, taking markets lower. A close above 2375, we could easily see 2400. If we get to 2400, I don't see why we won't get to 2425, 2450, 2475, and ultimately the 2500 level on gold. If we stay below 2375, stay below the trend line, close below 2300, I don't see why we won't get to 2275, 2250, probably even 2200 level on gold, which is my first market to look at technically. Now the next market that I'll look at technically is US oil. Inflation is accelerating. We have tensions in Middle East. We therefore expect oil prices to at least start moving higher. You know, if you look at it from a fundamental perspective, I don't think oil prices should be lower. They should be higher. Tensions never do well with oil. Wars never do well with oil prices. There's never a time where war will lead to lower oil prices. Definitely, oil is a very valuable, you know, resource when it comes to fighting. The one who has more jet fuel and all these other things is likely to do more damage than the one who doesn't. So oil prices are likely to keep moving higher. We saw a move from the start of the year around 75 to around 87, 88, 89. So if you look at it from a weekly perspective, I think prices have started moving higher in my view. Last week we had at least a bullish close. So if you look at markets from my perspective, we rejected $70 a barrel, started moving higher. We've closed above $80 a barrel, closed above fair value area. I therefore expect $90 a barrel soon, probably 95, 97.5 sooner. In the extreme cases, $100 a barrel, I wouldn't be surprised by that before the trend continues to the downside. But for now, short term, very bullish on oil. If I look at it from a daily perspective, however, markets have bounced off this line the third time. Fair value area, we started moving higher. A close above 85, you know, confirms the move higher. And if I just think down to the 4-hour time frame, this one was quite easy. You know, it's a one-way bet, quite aligned. I'm watching this potential move, you know, for a buy around 82.5 in the extreme cases, but I'd still be very skeptical about buying before the Feds speak. I think markets will ultimately move after the Feds have spoken, and it's wise to wait for the Feds to speak for you to get a clear sense of direction, a clear sense of levels, a clear sense of where fundamentals are going, and probably, you know, position yourself likely to benefit more or to make some profit. So that's my outlook on oil. The next market I'll look at is US 100. So stocks started the year quite high, consolidated for quite some time, and then we started seeing a sell-off as we were coming into Q2, as we were coming into April. You know, markets made new highs. Nasdaq trading as high as 18,500. The Dow coming to 39,000. Those are highs we'd never seen before, but markets have attained them. Now, if you look at markets from a weekly perspective, like I was saying, you can see clearly we rejected 18,500, started a decline, go to 17,000, find some solid support at that level, and markets have started coming back higher. Now, I'm just keen to see whether markets will close above 18,000 and rally to 19,000. If we don't close above 18,000, we could easily see a move to 17,000 and below. But my 18,000 is my level. That's the level I'm very keen on to see how price behaves around the level. On the daily chart, if I just go down on the daily chart, you'll see that clearly markets have moved down, found support at 17,000. Demand came into the market, we started moving higher. So we're currently floating in between. If we get a correction back to 17.5, then I wouldn't be surprised by a correction to 17.5, a continuation to 18,000. And if I go down on the 4-hour time frame, that would be represented by this third trend line bounce. So bounce 1, bounce 2, we'd get a third trend line bounce around 17,500, 17,400, and probably a bullish move to the 18,000 level. That's a potential setup that I'm watching, but I'm very keen, very patient. I don't have any hurry in making money in the markets. Next, I look at the pound. The GBP USD has been quite bearish, bullish, and all over the place since we started the year. So this is my best pair, my most profitable. I don't just choose best based on how I feel, based on how much money I've made. GBP USD started the year on a very choppy price action. Then when January was coming to an end, start of February, mid-February, price started ticking higher, but it never went so far. You know, we got to 1.275, 2.8, started selling off from that level, and we've sold off all the way to about 1.2375, where we found support and we're coming back. Now, from a technical perspective, if you look at the price evolution, you can see clearly the trend is still to the downside, and with inflation ticking higher and rates expected to stay higher for longer, that means the dollar is likely to stay stronger for longer. And if we're going to get cuts in some regions and no cuts in other regions, then I think currencies, we can easily have the carry trade taking place. You know, for example, if euro starts cutting and the Fed still remain, I think we could easily get a carry trade on euro USD. Same to pound, same to other regions. And I think I saw one bank starting the cut, not a very major bank though. I think it was the Swiss bank. I'm not so sure. You could confirm on that one, but they cut by 25 basis points, being the first bank to cut. I'm not so sure you could confirm on that one, but there's a bank that has started the cut cycle already. So from the technical perspective, now in line with the fundamentals that I've just shared with you, we could easily see markets remain below 1.25, remain below the fair value area. And we could start seeing moves to 1.2, probably 1.175 before we get a reversal or a move higher. On the daily time frame, if I look at it from a daily perspective, you know, this is the choppy price action I'm talking about. So you can see a lot of choppy price action, and move higher, then we just start moving lower. So for me, I'm very keen to see how the pound will trade this week. I'm short more than long. I expect rates to stay higher for longer also. So we could easily see the trend continue to the downside. And on the 4-hour perspective, I'm watching for potential short around these levels, you know, 2.6, 2.6, 2.5. Waiting for the Feds to see how the Feds will do, and then I can know how to position myself. But probably after a bounce at R2, we could be preparing ourselves for potential shorts and potential collapses, sending markets lower. So watching that level keenly to see how prices will behave around that level. Finally, I look at Euro USD. another profitable pair of mine, I guess because it's of the correlations. If I look at it again from a weekly perspective, starting from the weekly, the euro has started the decline lower. We've started the move from fair value area. We're now at S1. I expect markets to drop at least to S2. 1.05, could easily see that level. If I look at it from a daily perspective, you could see this beautiful channel formation, suggesting prices are likely to still keep moving lower. I think if prices remain below 1.075, below this channel, we could easily see 1.05, which is the next downside target. And then on the 4-hour time frame, if you look at markets from that time frame, you can see we've gotten bounce 1, bounce 2. Now we could easily come back for a potential bounce 3 at the 1.08 level, and then we could start now collapsing lower, breaking past 1.075, 0.625, and probably even dipping lower to the 1.05 level, which is the next downside target.
Hello traders, this is Taras from Financial Hub, and today I have a did you know. So did you know that we have free classes for our course? So the first 2 classes in our modules are free, so feel free to register and enroll. Come get a chance to experience our course, get a chance to experience our office and interact with us, and also meet other traders. So if you're really interested in learning trading, getting into markets, kindly DM us or get a registration link below, and you'll be able to get slotted in for the sessions. Seats are limited, so first come, first served. Welcome. See you here.
So that's my outlook on markets. That's what I expect to happen in the markets, fundamentally, technically. From an account perspective, I could share with you guys some of the accounts that I'm trading. So this is one of the accounts that I passed to get to the live. You remember I shared this account for 4 traders. So this one I started down. I'm down about 2.9%, so not really bad. Not done any withdrawal on this one yet. I'll keep you posted if I get to the withdrawal, but I've just been trading it for around 3 or 4 weeks, so not a long time for you to get to that point where you're not very happy with what you're doing. I'm very, very contented with what is happening on these accounts. The second account I could somehow share with you is this one. I don't know if the trader dashboard is still open. Yeah, so this is also another account that I had. If I just look at it from the dashboard, this one is a 100k account. It was still a live account. I have about a 5.1 I have a $5,000 profit on this one. I'm supposed to withdraw this one, so I've not withdrawn on this one though for quite some time. I've been trading it, you can see, for quite some time. They have some rules which I've been trying to navigate. It's a high frequency trading account, so I got it from that perspective, but still doing well. Just waiting for them to see if they'll pay me. I'm not so sure if they'll pay me on this one, honestly. So just waiting to see if they'll be able to pay me. If they don't, well and good. If they do, well and good. I also have another account here. This is the 25k account, a very small account that I have. I have a small drawdown here of about 4.5. Really working hard on this one to take it back. I think I'm now enjoying the process of going into drawdowns, coming back, taking the account into profitability and withdrawing. I think that's the process of trading, so I'm really, really enjoying it. And then I think the other account that I can somehow share with you, the last one, is this account, which I have made about $10,000 on it. So I started trading this account the same time with the other account. So you can see this one here, I have about 4,700, and I also have some extra money on this one that I did some withdrawal on. So if I just shared advanced insights, I don't know if it's there. So program objectives, so you can see I have $4,700 withdrawn. Yeah, so you can see this one to be withdrawn, not the daily loss. So I've already made a withdrawal on this one. This is, I think, one of the best prop firms I've ever used. They sent me my money very, very quickly. Let me just share with you that one. Let me just look for it. Yeah, so this is what I was looking for. So you can look at the total amount I've made so far, about $9,800, which is about $10,000. Not bad, just from one account and in a period of about 3 or 4 weeks. So that's all I can share. I have other accounts, but I won't go into the details of those accounts. As much as we want to share, we also want to keep some things, anonymous, and also just keep trading. That's what we are paid to do. Even sharing of these things, we don't do it as a sign of trying to show people that we've made money. No, we just do it for the few people who are interested in trading professionally. There are very many people who will sell you the idea that you can make money quickly, make money in 1 or 2 ways, but I'm here to tell you it takes time. You can make money, but it takes time. It's a very hard thing to do. It's going to suck the energy out of you. But if you can do it, man, I don't think there are many other professions where you can make $5,000, $6,000, $7,000, $8,000 in a few weeks. So it's quite intense, quite heavy, but it's worth the effort. So I think I'll stop there for today. So we'll catch up with you guys probably on the next one when I'll be doing it. So with that said, I'll stop there for today.